Everyone's asking, are we heading for a recession? Well, not yet, but we are having an economic slowdown. The truth is, it depends on how deep the slowdown goes. Let's look at the signs of a minor, moderate, and deep recession, and what the timeline might look like. 1. Minor recession. The soft landing. This is everybody hoping for, and the Fed is working hard for this. Signs to watch. Slower job growth, but still positive hiring. Stock market dips around 10 to 15%. Consumers cut back slightly on big-ticket purchases. GDP growth flattens, maybe 1 or 2 quarters of tiny contraction. Possible timeline: late 2025 to early 2026. This feels more like a cooling off period than a crisis. The economy bends but doesn't break. 2. Moderate recession. The standard downturn, meaning the most common type of recession. It lasts about 6 to 18 months. It's sharper than a soft landing, but nowhere near a Great Depression or 2008-style crisis. Signs to watch. Unemployment rising above 5%. Stock market down 20 to 30%. Business investment slowing sharply. Housing and car sales drop significantly. Possible timeline: mid to late 2026. This is what economists call a normal recession. Painful, but something the economy can recover from in a year or two. 3. Deep recession, the hard landing. This is what the Fed works hard to avoid. Signs to watch. Unemployment spikes above 7%. Stock market crash greater than 30 to 40%. Widespread corporate bankruptcies. Credit markets freeze and banks pull back lending. Possible timeline: could happen if multiple shocks hit together, such as inflation flaring back up, geopolitical crises, or financial system stress. In this scenario, the economy faces serious stress. It takes years, not months, to bounce back. If I had to make a prediction based on what we know now in October 2025, I would lean toward this. Most likely scenario: a minor to moderate recession beginning in late 2025 or sometime in 2026, if the following is happening. Inflation is easing, but tariffs and global uncertainty are adding pressure. The labor market is cooling, but not collapsing. The Fed is starting to cut rates, which suggests they see risk ahead. Corporate earnings growth looks set to slow, especially in non-tech sectors. Less likely scenario: a deep recession or crash. That would require multiple shocks hitting at once, like inflation reigniting, a major geopolitical crisis, or an AI/tech bubble bursting violently. Possible, but not my base case. Best case scenario: a soft landing where the economy bends without breaking. It's not impossible. Consumer spending and tech investment are still strong, but the odds are lower given structural risks such as debt, tariffs, global slowdown. My personal odds, a rough estimate. 40% chance, mild recession / soft landing. 45% chance, moderate recession. 15% chance, deep recession. So, yes, a downturn looks more probable in 2026 than in 2025, but I'd expect it to be moderate rather than catastrophic. When I say late 2025, I mean the fourth quarter of 2025. Here is the breakdown. October 2025, still in the holding up phase. November to December 2025, where cracks could start showing. Early to mid 2026, where the slowdown would be felt in full. So, are we heading into a recession? Yes, but how bad it will be? The answer depends on the signals we see in jobs, markets, and spending. A soft landing is still possible, but staying informed helps you prepare for whatever comes next. Subscribe for more economic insights so you can be prepared. I'll see you in the next one.